Hello everyone, we are coming to you live from Silicon Slopes here in Salt Lake City. I'm your host, Jack Cassel, and joining me today is the founder and vice chairman of HealthEquity, Steve Neeleman. Steve, thanks so much for coming on the show.
Thanks, Jack.
So maybe to kick things off, tell us a little bit about your journey with HealthEquity, starting from the garage and building this all the way up to the public company it is today.
Sure, so a little bit of a different journey. I'm actually a trauma surgeon. And so I'd done a little bit of business before I went into medicine, and then I just kept seeing these challenges in healthcare. And when I heard that healthcare was a $2 trillion business, and there's some estimates that a good chunk of it, maybe a third of that, could be better spent, that's what got me thinking about HealthEquity. So we did start the company. It was actually a small apartment above a garage, and it was about 20 years ago. And the whole goal was to try and reconnect physicians and patients, but to also see if we could take some of the waste out of the system by empowering patients, and that was the idea. And so it's kind of all based around these new accounts called health savings accounts. HealthEquity, we believe, is the largest health savings account provider in the country. And so when people have HSAs and you can get them the right information at the right time, they start to now look at their health care as an ability not only to stay healthy, but to start to prepare for retirement, to have a long-term savings account, and that's what we do. And so HealthEquity manages those.
Yeah, so sticking with that, because it has become a competitive space, and obviously you've got a first mover advantage, but how has HealthEquity leveraged technology to really differentiate itself in this market?
Well, kind of from day one, I mean, one of the challenges is that if you wanted to have one of these accounts, and first it was a medical savings account, and now it's health savings accounts, the insurance companies would make you fill out your paper application for insurance coverage, and then they would say, now you got to fill out some sort of paper application in order to have an account. And we said, why don't you just make that all electronic? You know, you fill out one application, you automatically get enrolled in a health savings account. There's different checks that need to be made. For example, to make sure there's anti-terrorist checks and things like that. And so how can you confirm you're a U.S. citizen and you have the ability to open an account and things like that? We do that all electronic. And so we think of HealthEquity as a technology-enabled services company, and we have now over 15 million families we're doing this for. If you look over all of our products. And so if you don't have technology, you cannot scale the service. You'll end up being kind of a smaller company that just cannot scale. So from day one, we've been using technology to scale, and I think that's why, what started out as a little tiny company is now competing with really big companies in the United States, and these are, companies that are brand name companies, and HealthEquity is bigger than them right now, at least in the world of health savings accounts.
Oh, love it. The color purple. Starting to see that in a lot of marketing content. It's a good looking shirt. Great looking jacket, by the way, if you could zoom in on this. But tell us a little bit about what purple means to HealthEquity and why you're using that specific color through.
Well, so Seth Godin wrote this book, right?
Yeah.
Purple Cow. And I think purple is code word for being remarkable. And really, whether you're talking to investors and exceeding their expectations, right? It's this whole concept of under-promising and over-delivering. But it's not just to the investors. We think more importantly, it's to people that call us at 2 a.m. Because when someone's just starting to use this kind of healthcare benefit, and they're trying to figure it out, and they're standing in line at a drugstore, and they don't know how it works, and they reach out by chat, or they'll call us or whatever, and we give them a better, or just as good of an answer, maybe better sometimes, because of the tenure of our folks that are responding at 2 a.m. than they would get at 2 p.m. They say, wow, I want to do business with that company. And the remarkable thing about health savings accounts and these types of benefits is every person in the company uses them. So we'll get calls and outreaches from like the CFO of large companies saying this was the best experience I ever had. That was remarkable. So purple is remarkable. And we know that if we can be remarkable to our whole value stack, whether it's our teammates at HealthEquity or our members that we serve or the clients, we have 120,000 employers we work with. We have a couple hundred partners, big partners that are sending us business channel partners. And then ultimately to the investment community, if we can be remarkable, then we can do okay, and we can just keep pounding away.
Absolutely. And so maybe dovetailing that then into what do the next 10, 20 years look like from maybe a product services standpoint, but also what will you continue to do to be that leader?
So right now, about a third of Americans that are working have a health savings account. That number needs to go up. We need to get to scale where it's well more than half. And there's some initiatives where we can get people that are even on different types of programs that right now don't qualify for a health savings account. Like TRICARE, there's no reason why our vets shouldn't be able to have a health savings account. It's ridiculous, right? But the federal law doesn't allow it. Medicare, Medicaid. So we're going to keep expanding the market, and we think this market in the not too distant future can go from about a $100 billion market of health savings accounts, which is what's being managed now, to $1 trillion. And so we're pushing that envelope. HealthEquity is now the market share leader, but we're not going to rest, because if we can get the market up to over $1 trillion of assets, then it's time to, and not just then, we're going to start now to help people better not only understand how to save their money and invest it and grow it in a health savings account, but how to better spend it. Because if people can better spend their money, that's wonderful for them, it's wonderful for their employers, and it's wonderful for us because we get to manage more money.
Right.
So, right now we're managing about little more than $20 billion of health savings account assets, and we think there's a bright future.
And with the current markets, both at a macro and a bit of a micro level, and in a sense of the economic environment, what do you see the challenges or the opportunities?
Look, it's always challenging when people are staring inflation in the face. Healthcare inflation's always been, in our opinion, too high. Usually 2 or 3 times normal inflation. And when normal inflation is at 2.5% and healthcare inflation is at 7%, that's not good. Now, I can tell you that large employers that have gone kind of full replace HSAs for their benefits have seen their healthcare cost inflation drop. So we're going to keep pounding against that, but inflation is bad for everyone. However, I will tell you that in the current environment where interest rates are going up, that is a tailwind for our business. And a very kind of frontline investor can just figure that out pretty quickly if they look at how we've been able to perform, as interest rates have been going up. But we're not going to rest on that. We think there's so much more than just resting on a tailwind of interest rates. And so there's a great opportunity to take that, but more importantly, we need to keep investing. HealthEquity has always out-invested our competitors when it comes to technology investment. If you look at how we spend our dollars, our capital, a big chunk of it's on technology, and we're going to do that because we're going to scale, because we know that there's millions and millions more American families that we need to be serving.
Absolutely. And speaking of deploying capital, maybe one last question is, what is your acquisition strategy, and what has made you successful in?
So I think it's kind of neat. If you go back to the early days of these types of accounts, these health savings accounts, there were a few companies out there that preceded us. They're now part of the family, right? Yeah. So we've gone along and we've done, probably 15 to 20 acquisitions over the years. Some of them have been portfolio acquisitions where we'll just take the portfolio over. We've made some pretty significant ones where we brought on the team. We did an acquisition of a publicly traded company a little over 3 years ago, a company called WageWorks. Now they're part of the family. HealthEquity now has about 3,500 teammates. And so we've been very thoughtful about our acquisitions. We've done a few strategic ones, and we've done many of these portfolio rollovers. And so we're going to keep looking for them. And we've got capital to deploy. And when we see the right opportunity with the right set of teammates and the other kind of fundamentals, we're going to go after it.
Okay. Well, such a great conversation. Thank you for joining us today. And for those tuning in, hopefully they think of HealthEquity if they've got any questions for their health savings accounts.
Thank you, Jack, and let me know, and I'll figure out a way to send you the info on the jacket.
Perfect.
All right, thank you.